Hello everyone, Angie here from UK Money Wisdom. Today's video is one many of you have been asking for. Most of the self-assessment questions this month have come from people aged over 60 and all saying the same thing. Why have I been asked to file a self-assessment return? What figures do they want? Where do I find everything? And how do I actually complete the online form? So today I'm going to walk you through a calm, simple example using Alan, age 71, because his situation is identical to the ones most of you are writing to me about. So Alan has a state pension, a private pension, and a bit of savings interest. This combination often triggers self-assessment, not always, but very often. And by the end of this video, you will know exactly why and exactly how to complete the return yourself. I'll also show you the official gov.uk links you can trust and the HMRC Self Assessment references like SA 100 and SA 110. So you know you're getting accurate guidance. And all the links I mention are listed in the video description below for you. In section 1, let's look at why Alan was asked to file. Why did HMRC contact Alan? Well, Alan's income for the year is state pension £11,973, private pension PAYE is £5,000 and his savings interest is £350. Alan's total income is £17,323. His personal allowance is the frozen personal allowance we all know of £12,570. That's frozen until 2031. So overall, Alan owes some tax. The problem is this. Although the state pension is taxable, nobody deducts tax from it. HMRC tries to collect the tax through the private pensions tax code, but this often doesn't work perfectly. When HMRC cannot collect the right amount through PAYE alone, they ask for self-assessment, and that's form SA 100. And here's the gov.uk link. This is the official checklist HMRC uses to decide who must file. Alan's situation meets two triggers. Number 1, his state pension plus private pension go over the allowance. And 2, HMRC's system could not collect the correct amount through the code. Add a small bit of savings interest and the system simply wants the real numbers. Not everyone with Alan's exact income gets asked, but many people do. And this is why so many pensioners are surprised to receive the letter. In section 2, we're going to look at the only 3 numbers that Alan needs. Before starting the return, Alan needs just 3 figures. Number 1, his exact state pension paid. This must come from his government gateway account, not from the forecast. And the gov.uk link is number 2, his P60 from the private pension. This shows total private pension income, gross, tax already deducted. And number 3, his bank interest summary. Untaxed savings interest must be included. These 3 numbers make up almost everything he will enter into his self-assessment. In section 3, let's understand the tax on pensions on the gov.uk link. Because to understand the self-assessment form, Alan needs to understand how HMRC treats his income. And this gov.uk guide explains it very clearly. And it shows how state pension is taxed, how private pensions are taxed, how savings interest fits in, why some pensioners need self-assessment, and why some don't. This is one of the best pages on gov.uk for retired people trying to understand their tax. In section 4, let's look at HMRC's income order. Now, the key concept is HMRC always works in a fixed order, and it's this: 1, state pension; 2, other pensions; 3, earnings; 4, savings interest; 5, dividends; 6, capital gains; and 7, foreign income. And here's the gov.uk link. This page explains how each pension type should be reported on the SA 100 form. Seeing Alan's income in the correct HMRC order makes everything clearer. In section 5, let's actually complete the self-assessment form, shall we? The form Alan needs is SA 100, that's the main return, and SA 110, that's the tax calculation summary, generated automatically online. So let's go through Alan's return step by step. Step 1, his personal details. Alan confirms name, address, NI number, national insurance number, date of birth, his contact details. Step 2, the pension section. The return asks for 2 types of pension input. 2A, the state pension, and in the box, state pension received, Alan enters the exact figure from his government gateway, £11,973. And here's the link explaining this. 2B, private pension, that's PAYE. And in the box, other pensions and retirement annuities, Alan enters the gross amount, £5,000. Tax deducted from P60, £600 as an example. The link explaining how to report this is and step 3, savings interest. In the box untaxed UK interest, Alan simply enters £350. Banks no longer deduct tax before paying interest. They used to, didn't they, once upon a time. Step 4 are the check totals. HMRC shows Alan total income, taxable amount after allowance, tax due, and tax already paid. This corresponds to HMRC reference SA 110 tax calculation summary. In section 6, we're going to look at some common pensioner mistakes, and that will help you avoid these. Here are the mistakes that cause errors. Mistake number 1, using the wrong state pension figure. Use the actual amount paid, not the forecast. Mistake number 2, forgetting savings interest. Even £200 to £500 matters. Mistake number 3, entering private pension incorrectly. Use your P60 and not your bank statements. And mistake number 4, thinking self-assessment must be filed every year. It doesn't. Sometimes HMRC only needs it once. The link to check your requirement is here. You'll also find it below in the description. In section 7, Here's a simple assessment for pensioners. Now, some pensioners don't need self-assessment at all. HMRC may send a simple assessment notice. That's a PA 302 instead, which is a one-page tax calculation that replaces SA 100 altogether. And the gov.uk link is this, and again in the description below. Alan didn't receive one, but if you ever do, it means HMRC is dealing with your tax for you. In section 8, let's look at pension contributions and relief. Because some in their 60s still pay into a private pension. If you pay contributions yourself, you may be able to claim extra relief through SA, self-assessment. And the gov.uk link for this is as above and also as below in the description. And this is only relevant if you're still contributing. In section 9, do you need to file every year? Alan might need self-assessment once, occasionally, or every year. It depends on whether HMRC collects the right tax through codes, whether his income changes, whether there are any underpayments, whether savings interest increases. This is why two people with identical incomes can be treated differently. And that completes the step-by-step guide to self-assessment for pensioners using Alan's real-world example. If you follow the same approach, that's your state pension figure, your private pension, using your P60 figure, your savings interest, you'll be able to complete your own return calmly and confidently. Every gov.uk link I mentioned is in the video description below. Please leave a comment if you'd like me to demonstrate other pensioner income combinations in future videos. I'll be happy to. All UK tax details match the 2025-26 rules as we hold them. And please remember, this is general guidance only, information based on current UK tax rules and public statements for 2025-26. Please use gov.uk and a financial advisor if you need professional help. Do please subscribe to be sure of receiving all my videos, and please share this video for anyone who you think might need to see it. And if you wouldn't mind liking, that would help me too with keeping the channel going. So all that remains is for me to say, have a good day, and I hope to see you all very soon. Goodbye.